So we've been talking about family offices, about GPs, about the secret insight to make outsized returns. Now I want to talk a little bit about the family office's perspective from different standpoint. So around these chairs here, we have a few different angles that I want to understand better. Personally, we have the actual pension funds here, and this is a lot of money. I'm telling you. And then there is the groups and the corporate groups that have also billions of dollars of assets, not only into their company assets, but also they have the cap table, that the capex expenditures, and so they should be heard, right? When you talk about those allocations in 2025 and more. And then we have groups like Cisco here, who has been very active, surprisingly, into climate for the past many years. So really kudos to your team, Jocelyn, and you've been one of the thriving actor pushing the agenda, and really we need more people like you. And then we have, of course, Eric Schmidt's foundation, right? So, those families, those big tech founders who've made billions of dollars, we want to hear from the perspective of their fund managers and what do they do on the philanthropy side. And then Kyle is going to share us about that as well. And then from the nature perspective, is there a place for that, right? And is there what's the size of it? So Kim is going to share that. And I really wanted to bring that diverse panel together because I think it's not something that we see usually. And I'm personally very curious. So for this panel, I'm gonna run it just like a chat. Okay, it's going to be just like a bouncing back discussion between us, if you guys don't mind. So I'm very very curious about Kyle first because of course, Eric Schmidt is, say Eric Schmidt. So on the philanthropy side, tell us a little bit of what is the kind of allocation that you're looking at next few years. Of course, from the background of Eric Schmidt, you might think that he's going to be all about AI and things like this, but actually not. There's a lot of philanthropy. There's really interesting climate and nature. So why don't you kick it off by sharing with us what you're looking at, Kai?
Check, check. Hello, can you hear me? Great. Thank you. Yes. We are a single donor family office and group of philanthropies. Our principals are Eric and Wendy Schmidt. I work for the Schmidt Family Foundation. There are many other, as I said, entities in this ecosystem. One of the nice things about family offices is that they can be very flexible, right? We can allocate different forms of capital. In the US, we can be allocating tax-exempt capital through charitable vehicles. We can give grants. We can make bad business decisions just to get a project off the ground. So we have a lot of flexibility. One of the things I should say, so I run the climate tech program. Our objective within that program is to accelerate first commercial projects of new energy transition technologies that are not yet at scale, but which we know we need to achieve net zero plans. There's a lot of words in there. Each one of the words is doing a little bit of work. It's essentially, we are focused on the half of the gigatons that are part of every net zero plan, abatement or removal, that must come from technologies that basically don't exist today at any commercial scale. We think we know the reasons why. It isn't because of a lack of capital, but it's because of this valley of death between technologies that achieve sort of pilot scale and getting them over through that valley to their first commercial project, which involves maintaining some technology risk, which venture capital is well equipped to address in other contexts, but which project finance doesn't typically take on. So we think that this is a market failure that is standing in the way of achieving our climate objectives. So we're using philanthropic capital to, I would say, kind of grease the ball bearings and the flywheel, getting this technology and innovation stack going. So there's a range of different things. We across the group, we make equity investments directly and in funds. But in my program, we're trying to identify the specific risks that are preventing existing market actors from transacting and to mitigate, transfer, or absorb them with philanthropic capital such that the market can do what it's already programmed for.
In the US, it's such a big thing, philanthropy, right? And so this is really an element that I, as an European Frenchman, trying to understand what are the mechanics of this, and thanks God we have Jocelyn here to explain us for a corporate perspective why doing philanthropy. We had Suzanne earlier from Salesforce as well, but I didn't have the chance to ask her the question. So if you don't mind, like, why does it make sense for a corporate as big as Cisco to have their foundation, and what of the work that you guys have been doing?
Sure. There, we see increasingly corporate foundations exploring and getting into how to participate in impact investing, and specifically with the rise of an understanding and engagement around sustainability, there's been an interest of that to align with climate. And Cisco Cisco set out via Cisco Foundation on a $100 million blended finance commitment that is focused on climate. We're $50 million of grants sits along $50 million of impact investing. And maybe echoing what Kyle was saying, I think there's acknowledgement from a company that is passionate about innovation across different technologies and industries, and has had the experience of that Silicon Valley innovation ecosystem and story, and being able to say, how can we participate in supporting innovation for climate, and acknowledging that the capital journey is complex and the capital stack is diverse. And so acknowledging that with a climate commitment that says we want to be able to have philanthropy and traditional grant making alongside impact investing to address those capital needs that are diverse and dynamic at early stage innovative stage, or for early stage innovation. I think there's just an acknowledgement, having gone through that, of like, that's what's needed. And climate innovation has a lot of impact potential. So the foundation acknowledges that we can play a role with philanthropic capital in filling some of those capital gaps, and really, for lack of overusing the word, but catalyzing innovation in the climate space. Personally, I also know from experience working with many intermediaries in the space is, at a lot of these conferences for the last few years, you hear the call for different philanthropic actors or blended finance or new approaches to fill these diverse capital needs at the early stage innovation stage. And I personally believe that corporates and corporate foundations specifically have a really unique positioning to be able to fill those needs and to address those gaps. And so it's been really exciting to be part of the climate commitment. And out of that, we have $50 million of impact investing capital that we've already dispersed more than half into about 32 investments, of which I'm super humbled to see many of those faces in this room. And that impact investing has not just gone to direct deals into climate innovative companies, but we've also looked at how we can support different innovators on the financial side. We've supported Fractal, providing innovative financing for farmers and regenerative agriculture in the United States. And we've also supported Enduring Planet, who's here today, looking at alternative grant advances for funders that have to navigate the challenge of the grant landscape, specifically federal and state and government grants landscape. And so we've been really passionate about seeing how we can play a role in making sure that there is flexible and accessible finance for early stage innovation. And corporate foundations are in a great position to be able to answer that call that founders are asking for.
Right, because a lot of the projects that are first of a kind, for example, they might not be able to attract a Silicon Valley typical VC, but they might get a grant from you guys, and thank you for doing that. I wanted to have in this panel also different opinion from family offices that are not typically in climate, because otherwise we keep repeating each other's sentences, and so that's why I really wanted to have Yuri and also Scott here from those different angles, and so stepping back a little bit. Okay, let's stop drinking the Kool-Aid. Do family offices actually care? And what is the actual allocation of the assets towards alternative assets like, climate technology, frontier, or nature? So Yuri here have an experience meeting a lot of these family offices because he works with them on a very big personal real estate project, right? And that's the classic asset for any family offices to invest in, right? It's probably real estate and then stocks, right? And so what is the temperature on your side with all the discussions that you've had, and maybe also within the group that you represent, which, by the way, Bouygues, Martin Bouygues is probably the fourth richest man in France. And so Bouygues Group is a big company. And so that's, I want to have those perspectives from those people as well, because they need to be represented. So yeah, you're free to share a bit.
Sure. Thank you, John. This one works. Yeah. Thank you, John. Yeah. I would like to give you some context about Bouygues because it's not a very well-known group here in the US. Mostly because our businesses here they don't work under the Bouygues brand. We have been doing acquisitions with and kept the names with those other companies. But to give you just 2 cents, we are one of the largest construction companies in the world. If you add up all the construction businesses, we are at more than 35 billion euros a year of construction revenue. And the group is 58 billion euros a year. It's a publicly traded organization. However, the family still controls the group, and a very stable group when it comes to the family matters. Because yes, Martin and his family they are very involved in the business in the day to day. We have Gustavo with me, who's going to be speaking at another panel, and he's going to be touching a lot on innovation. And actually, Bouygues is very well known, especially in Europe, for the innovation regarding climate and sustainability. We are a weird contractor in this way, meaning trying always to stay a little bit upfront of the curve of learning and around sustainability and climate, specifically touching on engineering and obviously construction. And not only that, but the maintenance of the buildings, because 80% of the carbon CO2 emissions of a building come from the 3V scope. So actually, it's not that much about the concrete or the steel that you use, the materials, but actually the overall maintenance and the energy efficiency of the building that is going to come later. So given this context, I lead the key accounts and strategic relations worldwide for the company. I wear kind of 2 hats. One, I deal with, and my team we deal with multinational companies, let's say the Amazons of the world, and we're in touch with them to build their projects worldwide. But then on the other side, we try to engage with these family offices, as John was saying, to try to understand what are their needs or their appetites to invest in real estate, mostly in different countries. We like family offices that are engaged and hands-on on the projects. Otherwise, if they go to funds or they just give their money to somebody else to manage it, it loses a little bit this personal touch we try to provide. And at the same time, what we do is we try to, obviously to leverage on our network of subsidiaries. We work across 80 different countries. Family offices in general, they are like any investor, I would say. They look at the return on investment, the ROI of all projects, and the reality is that there's a green premium still in construction and real estate, and we need people committed to it because it's very difficult just to, if you're competing for a project, it's very difficult to just win it from a price point if people are not considering the green or the sustainable aspects of these buildings. So it's very important that these families are committed to that. We are seeing as well a little bit of a shift when it comes to the type of assets. Most of the times, historically, we've been engaged with family offices that are interested in investing in a lot of hospitality, creating their own portfolio of hotels, for example. And this has changed a little bit because there's been an increase in this social infrastructure. And we were talking a lot today about data centers, for example, but I would like to extend it to student housing accommodation. Another type of, when I speak about social infrastructure, it means that I would say the operation or the commercial risk of the project is very minimum because you have traffic already on it. Data centers today, I mean, a few years ago, they weren't considered social infrastructure because you didn't know if you would actually fill the data center. Today, you build a data center and before construction is it's already filled. No, so we're seeing a lot of move towards these infrastructure fund type of deals where family offices would like to put as GPs with us or LPs. And then obviously the pension funds come later once the asset is built and stabilized, and they would like to buy it from this SPV that has been put together. So I found that there's a lot of interest as well from family offices towards that.
That's good news. What about you, Scott? Talking about those pension funds, how many persons, ballpark number, okay? I'm not trying to trap you here, but how many percentage of alternative assets are we talking about potentially for frontier climate for the next few years? Of course, with your experience, okay.
Well, first, welcome to New York, everybody. I'm a lifetime New Yorker, so everybody who trekked from wherever around the world to come to New York, welcome to my city. I've lived here many decades. I have 5 decades. So welcome
You
to New
trap
York,
yourself.
right? Second, congratulations on being involved in one of the 2 most innovative sectors in the world, right? I think climate tech and AI are the 2 most innovative sectors in the world. So congratulations on coming to a conference that's focusing on one of those 2 greatest opportunities. Just a moment about Investiture, my company, my startup company, and then I'll talk about allocation. And it's related. So when people think about climate problem, part of it is money, right? Many people here know, but don't fully know that the world needs about $8 trillion a year spent on climate solutions to scale them. What you don't know is that's only 1% of the world's money. So it's not a large resource allocation to actually help scale climate solutions. That's great. The world's only spending about a quarter of that now, right? So Investiture was founded to find some new pools of capital to help close that climate finance gap. The largest pool of capital that we're focused on is the $12 trillion in the U.S. defined contribution market, or the U.S. 401k market. That's currently the most unintentionally destructive asset pool in the world, right? And it's unintentional. So Investiture is focused on educating employers and employees on how to be more intentional about that money, and then how to offer climate solutions as part of that portfolio. Most people who are employees are unsophisticated investors. Even some people in this room who are family offices, you still might be unsophisticated investors, right? Sophisticated investors, the most sophisticated investors in the world, VCs, private equity, that have a long-term time horizon, they're currently allocating 10% of their portfolio to climate solutions. Other patient pools of capital, like family offices and pensions and 401k plans, they have a long-term time horizon. Their allocation into climate solutions should also be about 10% if you're meant to be average, right? And then if you're a climate forward or sustainability forward pension, organization, et cetera, or family office, it should be greater than that. The problem right now is the current allocation, let's say just talking about the US 401k market, it's less than 0.5% into climate solutions. There's some money that's in divestment. Divestment as a concept for climate has been a concept for centuries, but it's divestment. If you read all the research studies around, is divestment actually leading to climate impact? Almost negligible, right? Especially when you're divesting and you're focused on equities, right? If you focus on divestment on the credit side, you actually have some positive climate impact, but that's divestment. This whole conference, this whole panel, everything that John's put together is around climate solutions. So what we want to educate people in this room on, right, as well as the pension funds, the 401k plans, and the family offices, is divestment is a step to the right action, which is investing into climate solutions. Climate solutions need trillions. Family offices are a great catalyst to big money. Capital flows follow capital flows. Family offices investing early at a 10% allocation or more, right, into climate tech, they will get followed by the huge institutional money like the pensions, like the foundations and other. So it's a great investment for family offices, and at that magnitude, 10% of your portfolio.
Yeah, and I think when we look back on climate, right? I mean, one of the biggest exits that is there is still carbon capture with carbon engineering, and that was Brookfield. So that's your guys, right? Pension funds money. So that pension fund came to Brookfield and then to climate, but that's one of the rare exits that we've seen in climate, unfortunately. And this is why a lot of people are questioning: is this still a real asset class to consider or not? However, I still see a lot of entrepreneurs keeping the business and pivoting a little bit the branding. The company remains the same, but they actually now helping data centers to produce energy and those kind of things. But the technology is a climate tech company, right? And I'm really excited about that. And on the other half, I see that there is those generous philanthropic donors who are here for real. They don't expect maybe the outsized returns. They just want to sleep better at night, right? And Kim here have a few of them, and quite a few actually. So I would like to ask you, Kim, um, how what kind of profile are those people that you had the chance to work with that they invested into worldview? What drove them? And maybe what kind of people were those? I'm curious.
Yes, I think it differs. Today we have larger institutional investors, right? But if you go back to our first investments and philanthropic support back in 2015 or 2012, 2015, that was individuals that started out with, high net worth individuals that wanted, and then they started their family office or they started their foundation. So I think we still have a good combination of these two, right? What I see coming now, I see the three ways basically of investing into nature-based solutions, as mangroves is a part of that sort of term. And number one is, of course, to do the early investment so you can plant and you get return in carbon credits. One carbon credit is 1 ton of removed CO2, by the way, because many people doesn't know that, right? Number two is that you can buy the carbon credits after they have been issued, after they have been coming out, right? And number three, and that's the interesting thing here, I think, and we actually talked about it as well in our prequel, and that is just like with new innovation in technology, climate technology, whatever. Before you can get a nature-based or a mangrove project investable, you need a lot of time because there's a lot of regulation, land access issues, and you need to make the project design description or the document, right? So that can take half a year before you're there, and there hasn't been an established seed funds, right, for nature-based solutions as you have in many technical innovations or venture, whatever. So this is actually a field where I think there's a lot of interest, and that can, of course, can be paid back in carbon credits later as well, right? So that's the thing. I think these three are all opportunities for family offices. And what I feel with a lot of the sort of next generation, the younger or the sons and the daughters of the family offices, they are asking us, but why should we do nature-based solutions? It's much better to do technological. It's so easy. We have always done technological investments in our family office, and now it's just climate. It is very easy to convince my father or my mother about that. The answer to that is we need both, and 37% of all the climate, the CO2 reductions we have to do can be done by nature-based solutions. 37% until 2030. So and beyond that, of course. So that is a unique opportunity. And just this, the price of CO2 removal with carbon capture, technological carbon capture, can be up to $1,000 per ton. I repeat that, $1,000 per ton. In our case, it's in most nature-based solutions between $10 or $50 per ton. Then you can take a bit of risk, right? Because the price is so low that I would recommend a combined portfolio of technological stuff and nature-based solutions. I think that is a good combination for a family office. I want to test out. It doesn't mean it was $3 million USD, right? There's nothing for most of the people in this room to test it out, as an example.
And what about the institutional? Like, you share a name, or if you don't want to, don't share. But like, what kind of institutional actually back those kind of nature alternative assets?
I mean, there are American, UK, Australian, but also Taiwan and other places, right? That there are more established investors, right? But we're also talking with some of the larger investors in the US, also in looking at bond structures just now. So there is a lot of interest. Actually, the demand for our carbon credits is so high that we are almost sold out already for the two first issuance this year, right? Like it's, and in the past, Salesforce, others have bought our carbon credits, right? So there are big corporates and investors. The corporates are buying to pension them, to retire them, to take out the tons of CO2, and then the investors are buying them to resell them and earn money on it. That's every other investment they does like that, right?
Okay. So we're in America, and I'm curious. I want to know, what is this new American dynamism? I've heard a lot about this. So I really am hoping for it because a lot of my portfolio company is here in the United States. So I'm hoping to get some money. But what I see is the IRA has been almost disappearing. So from the American family office's perspective, of course, AI, robotics. So maybe you, Kyle, and also you, Jocelyn, there's those huge area of investment. We're talking about hundreds of billions into the Stargate project, for example. We're talking about, it's $1 trillion into this new AI infrastructure, into reshoring, into energy sovereignty. Share us what is your perspective on some of the investment that you've been making that actually are into that area, and what's the exciting stuff where I want to be invest too. You can go ahead, Kyle, if you want. Yeah,
All right, I'll start.
I want to be
I'll
part of
say-
the great American
We
dynamism.
So again, we're pretty narrowly focused, meaning the program that I run on this problem of first commercial deployments. The reason for that is related to Wright's law, which is sort of a reformulation of Moore's law, which everybody's heard about at this point. There are different versions of it. I don't know which one you learned in kindergarten. I'll tell you mine. It's that the capacity of the chip doubles every 18 months, et cetera. Okay, it's kind of broken the trend line, but it still basically holds. Wright's law is a different formulation of this, which holds that learning rates increase with the cumulative deployed capacity of a technology, which means once you've built, 1 billion watts of a thing or a million megawatts. So, the million and first is going to be pretty easy to build. What's the hardest one to build? 0 to 1, right? So those are very far out of market. That's where we're focusing because we have some observable history for other technologies that once that you kick off that process of building the first ones, the cost curve comes down. In respect to AI, we're not focused so much on the relabeling. I don't know what the new American dynamism is exactly. I do notice that a lot of the pitch decks we see have the words or the letters AI on them. People have literally just scratched out the like green and climate, and they're replacing it with energy dominance, intergalactic energy dominance. That's the way to pitch things here in the U.S. today, in Sharpie in 48 font. We are more interested in tools that advanced computing techniques can help deliver that reduce ecosystemic frictions to achieving the energy transition. What do I mean by that? So for example, one of the reasons that new projects don't get built in the real world is because people don't have 100,000 hours of operating time in the field to observe the failure rates of the underlying equipment, right? We have that with gas turbines. But what if there were some way that with advanced computing techniques, we could reprice in real time with limited data the performance of these new technologies such that the banks, the lenders, the private credit, the insurance, the EPCs, the off-takers could all see that, this technology is working or that one isn't. And we learn at a quicker rate and we can deploy at a quicker rate. That's where we like to see it. This isn't my division. Shadi in the back knows more about this, but in the Schmidt Sciences group that we have, there's more of a focus on AI for Earth systems measuring, modeling, and monitoring. But I would say that's where we're looking at.
Can I take a stab? So I love the interpretation of American dynamism being up to us, right? So part of the dynamics that America's introducing is the volatility in politics and trade and investment and everything, right? That's one dynamic thing America's introducing, and we apologize to everyone who's not American for that, right? But on the climate side, the dynamics that I think is happening, and I'm a glasses half full person, right? But there's been a lot of investors that have been climate curious, but not actually putting their money where their mouth is. Right. And so to counterbalance the volatility of the political environment and the trade environment is that a lot of people are going from intention to action. Right. And also most people who are sustainability minded people, they've already exhausted what they thought they could do to make a difference. They've changed their diet. They've changed their energy system at home. Right. They've changed their commuting. They're having an EV. But not enough people have been realizing like, hey, what else can I do to fight this dynamic that has been introduced by American politics and seeking desperately what else they can do. And one of those things is use their money differently. And so people seeking a way to counterbalance the dynamics and then learning money is a huge way, which is part of what this conference is. People are now being aware, or if they were aware but they didn't take the action, they're now taking the action. It's taken society probably 6-8 months to even get a handle on the uncertainties that have been introduced by the US government, but now people can predict-ish what's going to happen. And so now people can start acting with a little bit of certainty, but this volatility has triggered intention to action.
It's okay. We are not political here. We wanna be neutral. And my question is really, where are the deals that you think are part of this new American dynamism? So investors in the room, if they're interested, can maybe allocate a little bit of their capital into those as well. But yeah, thank you for putting that perspective. And yeah, I think Jocelyn, you definitely have the right to say something because that's your American company.
I wanted to add to something that comes to mind, whether we're talking about the dynamics or whether we're talking about AI. What immediately came to mind for me was a term that we learned when specifically talking about AI, but I think it's also just been more broader, is I think in climate, we are a group of optimists. You wouldn't commit your life to this unless you saw, you felt confident you could create the light at the end of the tunnel. That optimism is across this room. I think whether you're talking about current dynamics or whether you're talking about AI, sometimes we add the word cautious before that. When it comes to AI, and we have these discussions with a lot of innovators or even co-investors, et cetera, a lot of that cautious optimism around AI comes from acknowledging we know that AI is only as good as the data it's built upon. And where is that data? How reliable is that data? How vast is that data? How unbiased is that data? How representative is that data? And something that we've been really passionate about as impact first investors is saying, we hear you. We also believe that. We do believe AI is going to catalyze, enable, and drive a lot of climate solutions across categories. And we have some great examples of that. Just eyeballing one of my investees in the room, we have Plan Blue, who leverages AI to essentially tackle a big challenge of being able to map, understand ocean floor, where basic technologies, sensors, and mapping just can't do it without that added layer that AI brings to that solution. And so we already know and have concrete examples of AI solutions in climate. And separately, we have solutions in wildfire management and even in using AI and data to better underwrite financing mechanisms for farmers. But when we make those investments, we always ask the question, where is that data coming from? And is it reliable? Is it vast enough? And so that's where I think it's really important for stakeholders in this room who are passionate about climate to think about how we can also, in parallel, contribute to the actors that are building those data sets. So something we're really passionate about is with our blended finance commitment, looking at AI potential in certain sectors, but then also looking at the data robustness and contributing to both. So we have a few examples. We published a blog the other week about some examples in regenerative ag and also in wildfire management or climate adaptation and resilience, where we supported nonprofits that are working on open source data that is quality, robust, unbiased in some of these sectors, but also paired that with an investment in some of the AI-driven or AI-enabled solutions that are built upon that foundational data that we think can really transform and tackle certain barriers that we're seeing across sectors. So I'm thinking of tackling that, keeping that optimism by looking at supporting not just the AI solutions, because it can just be tapped and thrown on anything, but looking underneath the hood and saying, what data sets are they using and how can we make sure that there is reliable data in those sectors and maintain that optimism in the space.
I want to say something about the involvement from the government or whatnot, because I think it's very important to have. It's what I was saying before, to balance the play field. Technologies are there, and if I look into construction or real estate, we have a bunch of technologies that we could reduce by a lot. Not only the consumption of the building, but at the same time the construction of it. The problem we have today is that, like, individually, I can change my washing machine. Perfect. That's a great step. But are you willing to pay a 20% premium for your house because it's green? And that's the real question. Because today we're facing a crisis that it's across different countries in terms of housing. We're trying to build more housing, but are we trying to build it greener or not? So I'm sorry to be I kind of the bad guy of the panel, right? But that's why I insist a lot when specifically on my sector in real estate. Again, we have the technologies, we know how to do it, but at the end of the day, when I speak to my partners, my investors, they tell me, I mean, I cannot build to this level because otherwise I don't sell it. However, there's the option that government sets the standards, the playing field is leveled, and then everybody plays in the same game, right? So then everybody's obliged to be at that level.
And this is something that we've heard and expected a lot, right? Oh, the IRA is stopping, so how do we do now? Let me tell you something that someone told me yesterday. James, are you here? Raise your hand in the room. James told me that actually, if you look back at the amount of private investments going to green energies for the past 20 years, it's under the previous Trump administration that it was the highest because the private sector had to step up. There were no IRA at the time. And apparently it went down after that. And now it might be coming up again. It's not my number. Talk to James, find him to find if it's the truth or not. I can share one experience that I have with one of the family office that I work with. And this family is CMSCGM. They are one of the big French family, and we've been helping them for the past 2 years to structure their family office fund, $1.5 billion. And they have a great interest to invest and support the new American dynamism, specifically in the maritime shipping and logistics. So we're talking about biofuels and alternative fuels and all this kind of stuff. From there to decarbonizing, logistics as a whole. But when they come in, they do invest in the United States. And for example, 12 is one of the deals that we've facilitated. And they do big check. And so I really think that the United States have something to offer. And I think if we look outside of the problem of, okay, there's not more IRA anymore, or not as much as we thought. Still, I believe that the de-risking element that you've got by having so many follow-on investors to potentially come after you and to potentially buy your equity is something that people should look at. For that reason, I would like to invite you, GPs of funds, you, philanthropic or CBCs, to share some of the deals that you have at the moment with allocations in the Atlas Coalition. We have been working with CMSCGM on that platform to let them access deals. And so that's a bit of advertising. We're looking for more deals. And so you can advertise some of the deals that you have an allocation with into that platform. It's called With the Atlas. And you've seen the QR code everywhere. This is for you guys to connect to each other today, but this is also the family offices only platform that we are launching to support family offices to access those allocation into deals that have been provided by the GPs in the coalition. So I hope you have a quick look at this, and we're just slowly starting that. Again, this is a coalition, we're like an NGO, so it's not like a full stack product yet, but we hope that with your support, with your advice, and with your suggestions, we'll make it slowly something that gets to that $1 trillion that we're talking together. Thank you so much for the panelists. Let's give them a clap.